Fantastic. Okay, great. Yeah, really interested to see some of the response. Oh, good evening in Las Vegas, of course. Yeah, this being an international webinar today. Well, it's good evening, good morning, good afternoon, wherever you are in the world today. We've got lots to cover today. There's been some fantastic moves on the gold and silver market, so this is great timing today. We'll be covering, well, I'll talk you through very shortly what we'll be covering on today's session, but there have, even now looking at the charts actually, just this morning, we have got lots of key levels to look at. So do stay tuned for the next hour, hour and a half, and we'll cover lots for you. And keep the questions coming as well. Nick is on the chat there as well. We'll be answering any of the questions that you may have. Okay, so today during this live session, guys, we are going to review the commodity markets this week. We're going to look at the top trades of the week on gold, silver, on oil. We're going to go through live technical analysis and trading. We will be identifying highly profitable trade setups as well a little bit later, and we'll look at the week ahead. So all the key events looking forward, key events later on today, and key events moving into next week as well. Okay, so the big news really over the last week has been the huge move that we've seen actually in the precious metals market. So precious metals soared to fresh highs in August. Gold rose over 5% and silver jumping 14%. So it's having some massive moves recently. Gold and silver prices hit the headlines once again last week. Gold price opened the week on Monday at $13.14 an ounce before closing the week at $13.77 on Friday. So it's an impressive move, increase of 5% in 1 week. Gold's strongest gain since the week ending July 2012. However, silver was the standout metal. So this week scoring its best weekly performance in nearly 5 years. Silver price began the week at $20 an ounce and 55 cents on Monday before closing the week at fresh weekly highs of $23.43 an ounce. So that's an impressive 14% gain for the week. Silver's biggest weekly percentage increase in the week ended, well, since the week ending September 19th, 2008. Okay, the main driver behind the latest precious metals move is soaring demand in Asia. The World Gold Council expects that sales of physical gold will reach as much as 1,000 metric tons in India and China this year, valued at a combined 87.6 billion. The world's central banks added 71.1 tons of gold to official reserves in the second quarter, making the 10th consecutive quarter of net purchases. And the technology sector has also seen a marginal increase in its appetite for gold, which ticked up 1% to 104.3 tons in the second quarter, and price declines and improvements in economic conditions provided a boost in demand, mainly for the electronics segment. Bank of America also predicts that bullion prices will average $1,495 an ounce in the fourth quarter, while JP Morgan projects rising averages in every quarter by the end of the year. So we will be looking at that we'll be going over some technicals as well. It's very interesting just looking at the charts where we are at the moment. You do want to take into account seasonality as well. August is typically a bullish month. We will be going into seasonality. I think some of you mentioned there the festive seasons, the wedding season that you get in Asia, but it's never going to be a smooth ride. There will be lots of shaking of the longs, and there'll be opportunities to go long and short all the way. We do predominantly day trade gold, so we're in and out every single day trading gold. It's a market which moves over around 300 pips per day, very day tradable market, so you don't need to be just going long or just going short. You can be trading each move as well right into towards the end of the year, and we'll be talking you through how we traded the FOMC as well, and looking at what to expect in September too. Okay, as well as looking of course at silver and oil today as well. Okay, so just a little bit of background on myself and Nick Kelsey at the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies. that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me on the call, helping to answer all your questions today as well, is Nick Kelsey. Nick Kelsey is professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, he discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've both appeared frequently on financial television, giving our views on gold and silver. So that's just a little bit of background on ourselves, guys. So moving on, we're going to have a look at, we're going to move across and we're going to look at the gold price. So the gold price currently, let's just move across to MetaTrader. I'm just going to have a look right now. So the gold price is $1,375 an ounce and 37 cents right now. We are incredibly close to the key resistance at $1,384. So we're only about $9 away from that, or 90 pips right now. So we'll be looking very closely at that level of resistance very shortly, because that could is quite an important event area for gold right now. Okay, so moving on to gold seasonality. Gold seasonality currently, you can see this is a seasonality chart for gold over the last 32 years. And what you immediately see on here is that coming in towards the end of August, seasonality is actually typically played out this year. We've had towards the beginning of the year, we did get a rally over January. We have seen a correction really go on from February. Just one thing, I just want to check very quickly. Are you guys seeing my slides on the screen? Getting a few questions coming through that not everybody is seeing our slides there. Yep, you are. Okay, fantastic. Right, fantastic. Okay, you are. Good. Excellent. Because if you're not, guys, we just got the seasonality chart on the screen at the moment, so that's what you should be seeing right now. Okay, so with seasonality, just coming back to you on that, so January, the beginning of the year, in typical fashion, and I'll overlay actually the last year as well, this year so far in 2013, so you can have a look at the comparison there as well. In fact, let me just flip between those. This is the 32-year seasonal chart. This is what we've seen so far this year. Okay, so this year has followed seasonality very closely. So we have seen a correction over the spring months. We got weakness, certainly. We saw a typical sell in May and go away, and we bottomed out in June and July, which is pretty common to have in the gold market. So this year played out exceptionally well for seasonality again. August didn't. It's not been one to well, it's been very predictive actually, very predictable month again in terms of the gains we've had. So we've been doing a lot of webinars since, well, all year, but since the beginning of August, we've been looking at this potential big move that we were predicting to happen in August. And we can see here on the 22nd of August now where we are. We're right at the peak for August at the moment. We're peak of seasonality. We've had a big rally from down in the early 1300s, and we've come all the way up to test 1386. So at the moment, we are at a point where we may see a correction here. So we're either going to see a breakout, we believe, of this 1386 level, or this is just going to hold as resistance. We could go a little bit further, going up to just underneath 1400, possibly 1415 on a breakout, but we are definitely expecting some sort of correction over the next couple of weeks, moving into September, before we have the next leg higher. So we'll be talking about that very shortly on our charts as well. So here is what the charts look like in terms of just on the MetaTrader, just taking a screenshot. So you can see this exactly where we are today on the 22nd of August. We are right at that pinnacle at the top there. We're at a decision point and event area. So it's a great time to be on this webinar today. We'll be looking at that very, very shortly. Okay, one thing to note, US dollar index at the moment. So US dollar index, this is just going onto a 5-year chart at the moment. The US dollar index has been testing a very important trend line. It's been testing this since, well, we've had this trend line in place since really the beginning of 2011. And you can see there, we actually came down, we tested it on FOMC again, and it just about held. Really important trend line. If this trend line breaks on the US dollar index, we do expect quite a big rally on gold. We would expect a spike from this trend line breaking, but at the moment it's holding again. It did cause during the FOMC announcement some downside with gold, then we whipsawed up, so we got some really interesting, very day tradable moves on gold. But the US dollar index, something that I'll be talking about very shortly on my Reuters platform as well, we'll have a look at that and news moving forward for the week ahead. But a very important level that we're holding on the US dollar index. So if you're gold trading, you need to have the US dollar index available to you as well. The average daily profit available on gold, silver, oil, and the commodity currencies. So we predominantly trade gold. We trade gold and Brent oil, WTI oil, but there are a lot of correlations here. Also with Australian US dollar, New Zealand US dollar, and also the USD Canadian dollar, which are all very day tradable markets as well. So I just want to talk you through these core markets that we trade and talk you through what's on offer. The average daily volatility, very day tradable markets. So gold, your average volatility is circa 295 pips. So with 295 pips average daily volatility on gold, it makes it an incredibly day tradable market. We're in positions most days on gold, getting in and out because it's offering those pips and those sort of very predictable moves on a daily basis. Very tradable during news announcements. It's very good for trading box setups, which we'll talk through a little bit later, where you get large moves and then the market consolidates and you get another breakout, which you find very often in the gold and silver market. You will have, even we've seen that this week as well, you will have huge moves over a couple of days, and then the market will just consolidate for several days, and then we'll get a next big move either to the upside or the downside, and these breakouts are very tradable. WTI crude oil and Brent crude oil, again, we've had lots of day trades on these recently. We're at a very interesting level on Brent crude oil today as well. We're coming really near to resistance. Again, we're not too far off 111 US dollars per barrel, which we'll have a look at. We'll look at WTI oil as well. Those two tend to move between 170 to 193 pips a day. Again, very day tradable markets. You can often get 2, 3 to 1s out of those trades over a period of less than 24 hours. And then moving on to the commodity currencies, Australian US dollar and New Zealand US dollar, very strongly correlated to the gold and silver prices. So we've seen some really interesting moves on those over the last week or two. We've actually had some really, I'll show you what the banks have been predicting on these markets all month. The price has followed the banks extremely well, just using the forecasting on Reuters there from the major banks. We can see they have been very bearish on New Zealand US dollar and Australian US dollar for that past month, and USD CAD they've been on the bullish side, and we've seen that play out over the last couple of weeks now, particularly last week. Had some really nice moves. And silver, average daily volatility 80 pips. Your day-to-day average move on silver. However, we have had some increased volatility recently and some really nice breakouts. So that is what you're looking at in terms of these commodities and commodity currencies. Very day tradable markets. You don't really need much more than that in order to be making some really good profits each week, and also just really banking a lot of pips. So we'll be looking at that a little bit more detail when we go over to my live screens. Okay, so just moving on to some forecasting here. So just going across to, first of all, we're just going to look at the commodity currencies very briefly here, because we're going to touch upon them when we look at the charts as well, and the correlations again with gold, silver, and oil. So New Zealand US dollar forecast. So this is just the Gold and Silver Club. It's the custom built, the Reuters platform, and custom built just in terms of the actual layout that we've got here for the Gold and Silver Club. And what you'll see here, this is New Zealand US dollar. So this is the forecasting of the banks. They've this is the top banks on Reuters here, and you've got the mean and median price forecast on there, and both of those still remaining bearish on New Zealand US dollar. They have done throughout most of this month. So we have seen a spike. We saw a spike going in towards the end of last week on Friday after the Philly Fed, we got a move up towards resistance on New Zealand US dollar, which didn't get penetrated, and we saw really nice, for those of you who do candlestick trading, we saw a really nice pin bar or gravestone doji on the daily time frame on Monday, which has actually worked out to give over about 230 pips now to the downside, just in line with the banking forecast. So it's been a really nice predictable move on New Zealand US dollar from that sell-off. We've also had Australian US dollar. On Monday, that started to really slide. Actually gave the warning, the kind of heads up for New Zealand US dollar. We saw Australian US dollar move first, and it's a bit like dominoes. Then we saw New Zealand US dollar move. Then we saw gold come down. We saw silver pull back. So that was a relatively predictable move as well. And you can see most of the major banks are also fairly bearish on Australian US dollar. Bearish to neutral, but we've had certainly a correction recently. And looking at USD CAD, so USD CAD was all the way down at support the earliest on Monday this week and on Friday last week, and then we've had just a really impressive rally over the last week or so. What's interesting is that on your forecasting here, the major banks have all been on the bullish side of USD CAD, even though we're really near a very important level of support for about the last 2 or 3 weeks. So this is something we were noting a lot, just in terms of being very cautious of any short positions on USD CAD. Around key support, because US dollar index has held that supportive trend line. USD CAD and US dollar index are pretty strongly correlated. We've seen that big move occur. In fact, USD CAD, we caught the breakout, and we're still breaking out just this morning. We're still getting that move. So we're going to see if we're going to test 2013 highs over the rest of August. So we'll be looking at that as well. So that's just a few correlations for you on the commodity currencies. Okay, so moving on, we're just going to have a look at Brent crude oil. So let me just bring up my pricing on Brent crude oil for you guys. Okay, so Brent crude oil right now, $110 a barrel and 17 cents. So we're almost really at 4-month highs here. So the 4-month high would be $110 a barrel and 97 cents. So we're getting very near key resistance. We're going to be very interested to see whether we're going to get breakouts there, or if we're just going to, those are going to provide more selling opportunities for Brent crude oil. Okay, so Brent crude oil, a few things you need to know. In terms of Brent crude oil seasonality at the moment, as with gold, we are in a bullish time of year with Brent crude oil. We're here, 22nd of August. We are sort of near the peak that you expect in August. We have seen that, so 110, just under $111 a barrel. There has also been a lot of geopolitical news which has helped crude oil get to those highs more recently, and the oil inventories which have been coming out on a weekly basis have also aided the large move up over August on crude oil. But this is what we're looking at in terms of overall seasonality as well. And this is so that's the, just going back there, that's the 24-year crude oil futures seasonality chart. And here is what we are seeing at the moment on Brent crude oil. So you can see we're right at the top of, so over the last really 3 or 4 months, we're right at the peak at the moment, very close to potential resistance as well, and see if we're going to get a breakout from $111 per barrel. So we'll be looking at that as well in our technical analysis. Before we do so, what I'm going to do, just talk a little bit more about Brent crude oil with you. So really the top 3 reasons to trade crude oil. Well, oil has a big impact on the economy. When oil prices rise, it affects the price of just about everything, because most products need to be transported. Producing nations are consuming more on their own output and exporting less. So Saudi Arabia, Iran, Norway, Venezuela are exporting far less oil than they did in 2006. Global population is growing rapidly, and more people are growing accustomed to better, more energy-dependent lifestyles. And crude oil is also an extremely day tradable market, a very volatile market, offers a lot of opportunities. So here is just the top 10 largest oil producers in the world. So Russia being number 1, Saudi Arabia number 2, the United States number 3, number 4 Iran, number 5 China, number 6 Canada, number 7 Iraq, number 8 United Arab Emirates, number 9 Mexico, and number 10 is Kuwait. So factors that affect oil prices. Well, factors that affect oil prices, one of those being crude oil inventory. So every Wednesday, so at 3:30 p.m. GMT in the UK, 12:30 in Australia, 2:30 in New Zealand, The Energy Information Administration, the EIA, crude oil inventory, they measure the crude oil inventories, the weekly change in the number of barrels of commercial crude oil held by US firms. And that level of inventories influences the price of petroleum products, which can have a significant impact on inflation and prices. That is something we've got in our diary every single week that is very tradable. We didn't, this week we actually, we had a bit of a deficit on the amount of barrels in stock. We did see an initial rally on crude oil, which then fizzled out. But however, the previous weeks to that, the previous week, going back to last Wednesday, we did see quite a large breakout on crude oil inventories, which led to over 100 pip move, very quick move to the upside from a box setup. So it is worth noting, if you're going to be trading commodities, trading oil, that you do have regular opportunities to be trading. You want to be really trading oil when it's at key critical levels. You know, if we had oil inventories coming out in the next half an hour, when you're very near $111 per barrel, very near a key level of resistance, and then oil inventories come out and there's a deficit on the amount of oil barrels available, and you start to see a break to the upside and break through $111 per barrel, that's a very tradable move, which you can be just trading off key levels. It's a breakout, you've got fundamentals to back that up as well. So it's well worth trading crude oil inventories. So what's the difference between Brent and WTI crude oil? We get quite a lot. Okay, so West Texas Intermediate, WTI crude oil, is of very high quality. So its API gravity is 39.6 degrees, which makes it a light crude oil, and it contains only about 0.24% of sulfur, making it a sweet crude oil. Whereas the Brent blend is actually a combination of crude oil from 15 different oil fields located in the North Sea. It's still a light crude oil, but not quite as light as WTI, and it contains about 0.37% of sulfur, making it a sweet crude oil also, but again slightly less sweet than WTI. So Brent blend is good for making gasoline. So that is the major difference between Brent and WTI crude oil. Okay, so what we're going to do now, we're going to move on to have a look at some of the Gold and Silver Club's top commodity trades of the month. So we're going to give you some examples on gold, on Brent crude oil, and also a couple of the commodity currencies as well. Okay, so first off, this is going back to actually to the end of last month, so the 31st of July. This is looking at gold FOMC. So this is FOMC announcements, also very tradable. Federal Reserve announcements, they have a massive impact on the gold and silver markets. We always make sure we're available to trade those moves. So what we saw on gold FOMC, actually, we came down to an important level around the FOMC, which was just under, you can see just about on my chart there, not sure if you can see that, but we essentially, just before the FOMC announcement, we had a nice pullback to key areas of support. Just looking at that chart, I believe that was around the 1276 level, and as soon as the FOMC announcement broke, we broke through 1300, and we came up very short and sharp past 1310, where we got triggered, which was a previous level of resistance, and we just came out at 1331. For those of you who've been day trading gold recently, you will probably know there's been a lot of activity, a lot of trades available between essentially from the there's a key Fibonacci around 1333, and there's been a lot of day trades available on the break of 1333 back down to 1317, and then 1317 as support back up to 1333, and then we've had test of 1347, then back from 1347 to 1333. It's just been very straightforward to trade off these key levels until we finally got a breakout of 1347. Throughout August, that's what we've seen. A lot of opportunities for day trading. So on this trade that we had on the FOMC, that was a 4-to-1 risk to reward. There were 50 points risk on the trade, so each lot traded $500, and 210 points reward on the trade, so each lot traded $2,100 US dollars of profit for each lot. Moving on, this is Brent crude oil on non-farm payroll at the beginning of August. This again was pretty predictable. We came up to a key level of resistance actually on Brent crude oil just before the announcements. That key level was just around $110 per barrel, we can see there that we've come up to this important level of resistance. We started to sell off. We formed a really nice inverse hammer on the daily time frame, and over the period of the non-farm payroll, this just continued to move in our direction. We got in entry 109.30, and we came all the way down to key level of support below at 106.75 for a total of 255 pips from the Friday through to the Monday. So once we, you can see here just the, hopefully you can see that on your screen, the non-farm payroll. So previous to the announcement, we had a really nice inverse hammer on the daily, came to a key level of resistance. And again, crude oil, it's one that moves very well off key levels of support and resistance. You don't really want to get caught too much in the middle of those key levels, but when it comes up to test key support or key resistance, you normally get one of two things happening. Either you're going to get a breakout or you're going to get a reversal and profit taking. So this was just one of those reversals and profit taking. We had a 78 pip risk on the trade, so $780 risk for each lot traded, and 255 pips profit for $2,550 reward on the trade for a 3-to-1 on Brent crude oil on non-farm payroll. Okay, this again, this was gold on non-farm payroll. So gold on non-farm payroll, this was going back, well, the same day as the Brent crude oil trade. We actually, you can see here where we formed a doji. So we came down, we had a big move down just prior to the announcement. We formed a doji. We had support, I believe it was around 1284 was the low of the doji, and above that was just 1294. So we had pending orders here just in order to get in if we were going to see very positive negative data, coming out of the US. The job numbers, they disappointed, and we immediately saw a big spike up. So you can see that where we're just catching those pending orders getting triggered on the trade there with gold, and that was a really nice move just on non-farm payroll, very straightforward, very quick pips achieved there. So 75-point risk on the trade, so each lot traded $750 risk for 200 points profit for $2,000 profit per lot. That was for a 3-to-1, and we actually came and found resistance at the 1317 trend line there, where we then found, since then, that's been quite an important level in the intraday moves on gold and silver throughout the last month. Okay, so moving on, this is another gold trade that we had towards the beginning of August. So just giving you really more and more examples of just intraday trades. This is actually when we came down and we bottomed out at 1284, just before the recent big move back up to, well, all the way up to the 1380s. So this is where we came down, tested a key level of support again around 1276. We found support there over the period of 24 hours. We started to form a box there of consolidation, and the price broke out above 1284, and we just come out there. That was just, again, a very quick day trade at 1295 for a profit of 110 points, so 35 points for each lot traded for $350 risk, and 110 points for $1,100 profit for each lot traded. And then moving on here, we've got Brent crude oil. This again was a nice trade, just a break of a key level of support. So this is going back to earlier on in August. This is in fact the 7th of August, and you can see here we had a key level of support which was just around the 106.50 mark. We kept on testing that mark, so we had a lot of different tests. I believe it was 7 tests of that key level of support, and then the MAs all turned really bearish. So that was an opportunity just on a pending order to short if we broke through 106.45, and that offered just very quickly about, well, 162 pips actually. We just came all the way down towards a key Fibonacci level just below. 50 pip risk on that, very straightforward trade, break of support, and we found 162 pips on that trade for $1,620 profit from a risk of 50 pips, so $500 risk per lot traded for a 3-to-1. And here, so the recent breakouts that we've had in gold have been, again, really nice to trade box setups on. So this has been really nice. So in terms of consolidation, we did find, this is going back to the 12th of August now. And funnily enough, we got quite a few breakouts over the course of August on Sunday evenings. So Sunday evenings for us in the UK. This proved profitable for about 3 weeks running. We kept on seeing breakouts each of those evenings, which are fairly predictable. So coming to the table on Sunday evening here, we had this box setup which had formed, had a V-shaped you can see that the bottom that had formed there on the chart at a key level of support, and all the moving averages were just all starting to point to a bullish move to the upside. So we were just waiting on a break of the box. You can see there, break above 13.18, and we just rode that trade, and actually very quickly came all the way up to the 13.40 level for about 300 pips on that trade. You could have got, in fact, some of our gold and silver club traders also just exited over the course of about 45 minutes to cash in over 300 pips. So that was a really nice move on a breakout trade. Again, breakout on Brent crude oil. This was actually oil inventories on the 14th of August. And this is where, again, we saw a level of consolidation. Before major news announcements, it's pretty common to see gold, silver, and oil. They start to consolidate. You know, they're waiting for more news before traders are going to start taking additional positions. We start to see a consolidation, and then once the news breaks, we can often then get a breakout. It helps if you're at a key level. So we were at a key Fibonacci level on oil here at 108.43, just the green line there on the chart, and then we got a breakout, and then we came all the way up to over $110 per barrel, so over 150 pip move on oil inventories on the 14th of August. And here is this was lovely. This was the trade that we had just going back to last week, last Thursday, where we finally had the breakout above 13.48. So we got triggered into this actually on pending orders. There'd been a lot of pressure around the 13.47 mark that had found gold had found resistance there on 3 occasions. It come up, retested that level, and just sold off from there. So finally we broke out, and we just saw a really nice move all the way up to the next Fibonacci, which was $1,370 per ounce. So that was a really nice breakout. Just going back to last week on gold as well, which we can talk you through very shortly on the live charts as well. And we just go through a couple more examples, guys, and then we're going to move on to the live charts. We'll look at, I can't see your questions right now. Nick will be helping answer any of those, but we'll come back and we'll answer any questions as well during the live technical part of the webinar. So Brent crude oil here, this is just going back to more recently, last week. So we had a break of $110 an ounce here. That was a level of resistance on Brent, and we just rallied all the way up just to under $111 per barrel. We couldn't quite break it, but we had a nice 90 pip, couldn't quite break the $111 per barrel level, but we had a nice 90 pip move. So the risk on the trade was 40 pips, so 400 US dollars for each lot traded, for a reward of 90 pips, so $900 for a 2-to-1. So it's a nice breakout on Brent crude oil. Earlier on this week, we've had some nice moves on gold and silver as well. So silver, fairly predictable, nice inverse hammer at a key level of resistance just earlier in the week on Tuesday. We then just came down to next Fibonacci level below at 22.30. Very quick 89 pip trade. We got filled overnight and actually came out of profit just in the morning. So it was a 42 pip risk on the trade, 420 US dollars for each lot traded, for a reward of 89 pips, so $890 for a 2-to-1. And New Zealand US dollars. So here's the move that was predicted by a lot of banks as well. Really nice, strong inverse hammer, right resistance. We actually got a fake breakout last Friday, and then we got this nice, really big inverse hammer, a nice long tail to it, providing an opportunity to go short. And you can see just, in fact, we've continued to go a little bit lower over the last 24 hours on New Zealand US dollar. But this also correlated with a bit of a pullback we've had in gold and silver this week. But that offered a nice 203 pip move over the last 3 days. And you can see risk here, 60 pip risk on New Zealand US dollar for 203 pips reward. So 600 US dollars for each lot traded, for $2,030 profit for each lot for a 3-to-1. Brent crude oil also offered an intraday opportunity this week as well. Came back and tested that again just yesterday, 109.40 around that support level, and we've rallied back again to above $110 per barrel. So again, Brent crude oil just really moves very nicely off key horizontal levels of support and resistance. So now we're going to be looking very shortly whether we can get a retest of $111 per barrel. But so this was a little bit earlier on in the week on Tuesday, and you can see here entry at 109.32, exit 110.56, profit of 124 pips. We were only in this trade for about an hour or so and just banked it. 60 pips risk for $600, risk on each trade for 124 pips, so $1,240 profit for each lot traded, for a quick 2-to-1. And this is gold, more recent moves that we've had on gold actually. So this is just this week as well, where we've come down to that level. The buy area really for most of this week has been between 1350 to 1360 on gold. Whilst we hold that level, we'll be this is a potential buy area for gold. So what we'll do, we'll look at charts and we'll show you setups we're looking at right now and actually how we'll be trading them. So we're talking about a lot of trades which have occurred this week over the course of this month. What we'll do next is we'll actually talk you through what setups we're looking at next. So this is buy entry just 1358 and coming out at 1376. So you've got that box setup even starting to form now, level of resistance, key level of support. So 50 pip risk for each lot traded, for $500 risk to make 180 pips, $1,800 profit on each lot for a 3-to-1. And this is just going back to the FOMC. So the FOMC statement that we had on Wednesday. What we did see immediately on that is we got a sell-off from the FOMC from resistance. We just came down, and again we came into that buy zone between 1350 to 1360, and what we saw next was that supported overnight also by Chinese data, and we had a really nice buying opportunity again just to take another 200 pips off gold again for a day trade. So we love trading Federal Reserve announcements, FOMC, a lot of announcements, particularly if the gold or oil markets are at key levels, offers nice tight risk to reward on those trades. Okay, so before actually on talking on the subject of the FOMC, and before we go on to live charts, there are three scenarios really we look at on how to trade the FOMC minutes. So scenario one is the Fed emphasize economic progress. So they talk of tapering treasuries, and that's bullish for US dollar and bullish for gold. So the first thing that we look for in the FOMC minutes release is a level of conviction for easing in September. So most Federal Reserve presidents currently support some type of action over the next 3 months, with more leaning towards a move sooner rather than later. So sorry, that's bullish for USD and bearish for gold. If the minutes emphasize progress in the US economy and the need to act quickly, we expect the US dollar to gain strength and gold to weaken. So that's important to look out for details on which assets the Fed will further taper. So the choices between treasuries and mortgage-backed securities, and the Fed talks about reducing purchases of both. It should be supportive of both the dollar and yields because it represents a more aggressive and broad-based reduction. Okay, so the next scenario 2 on FOMC minutes, Fed cautious, so signals potential for delayed moves, talks about tapering only treasuries, and that's bearish for the US dollar and bullish for gold. So if the minutes contain an overall air of caution, with more FOMC officials screaming about the need to wait for further improvements before changes are made, fueling speculation for a December over September move, the dollar generally tends to fall sharply as traders readjust market expectation and US yields decline. At the same time, if the Fed suggests that their focus is on reducing treasury purchases, that US dollar tends to weaken, as this would represent a smaller and less aggressive initial move. And number 3, scenario 3 is divided Fed. So this is no operational details on tapering. So that's bearish for the US dollar and bullish for gold. So that third scenario is also negative for the dollar. That will involve significant dissent within the FOMC and no operational details on tapering that suggests the central bank hasn't ironed out their plans. So a lack of even minor consensus is bad news for the dollar because it increases the chances that the Fed will have to postpone their move to December. Also, it's worth keeping a lookout for any qualifying statements that suggest a move this year would be incremental or one-off and not the beginning of a broader trend. So those are the 3 scenarios we look at for FOMC announcements. Okay, so with that, guys, what we're going to do now, we're going to switch to my screen. So let's just do some desktop sharing.
Hey guys, give us just 1 second. Phil, I think logged out and is probably coming right back. So yeah, he was on a roll. Modi, we've got all the presentation times. I'll post a link for that right here. Give us just 1 second. I'm sure he'll be back in just 1 minute. Okay, there's Phil. So Phil, I think, is going to try to get his screen sharing going here in just about 1 minute. All right. Well, good, WK. I'm glad you're enjoying it. Appreciate you guys. Appreciate you staying up for it. All right. Hey, Phil. I'm not sure if you can. Um, if, if you're having issues with the projector, sometimes it helps if you log in with Internet Explorer. If you try a different browser, if it kicks you out again. But I know some guys have had kind of a weird issue with that. Yeah, Mark, it's kind of interesting. We did a webinar about a month ago at 2 a.m. and the guys who were speaking next were actually the guys we did it with, Trade the London session. And when we originally did it, I did it just to kind of see how many people would be crazy enough to show up, and also how many people would show up in Europe and Australia where it's not so early. And we really had a great turnout even in the U.S. at that time. And so we said, well, what if we did a 24-hour trade-a-thon? All right, there we go. I think Phil's screen is shared now. Good deal. All right, Phil, I'll turn it back over to you. That's right. Yeah, money never sleeps. That's true. Yeah, Ken, I know. For those of you that are over on Australia, New Zealand, Southeast Asia, it's a good time for you guys. Hey, Phil, I think I might be able to help you. Let me take the mouse for a second. If you hit this X right here. Click on that X. All right, Phil, let's do this. I'm going to stop the projection for you. And if you can, do your mic test, get your mic set up first, and then project your screen. So go ahead and before you turn the projection on, turn the mic on and get all of that set up. Where's everybody tuning in from? I'm in Mobile, Alabama. Got Hawaii, Chicago, Canada, Los Angeles, Omaha, Sydney, a couple Chicagos, Florida, London, Singapore, New York City, New Zealand, the Philippines. Hey, Glenn. Dauphin Island. Yeah, Phil, if you put your mouse over where you turn the mic on, there should be a little wheel right there, a little kind of settings wheel that you can go through to set up the mic. Okay, yeah, it's just 1 minute here. We're just working with them on getting everything set up. All right, guys, yeah, just bear with us here for a couple moments. We're working on it. Appreciate your patience with everything.
Hello, everybody. We are back. I believe you can. Our mic is back. Can you just checking you can hear us? Okay. Yeah. Okay. Fantastic. Right. We've just we tried Internet Explorer, Firefox. That does the presentation okay, but for sharing screens, but you can't hear me. So what I'm going to do, I just created a very quick screenshots of my charts, and I'm going to share them via slideshow. So I'm going to just upload this. Very impromptu, but let's see. Should work. And then we'll go back to the main presentation as well, because we've got lots of key news to cover as well. Okay, that's just converting. Be with you in just a second as that uploads. Okay, I think let's have a look. Do we have success here? Right, okay. Okay, I'll tell you what I'm going to do, guys. We're going to move back. We're going to see if we can get I'm really keen to go through the charts with you. We'll go through the week ahead, so the key news in the week ahead. And what I'll do, I'm going to send Morgan this presentation just very quickly and see if we can get it up whilst we do that as well. We've got another 35 minutes or so, so I think we're going to have time. We're going to go over Brent crude oil, silver, gold, and also US dollar index with you guys. So bear with me, and we'll see if we can get this. We'll definitely see if we can get this up and running for you over the next 30 minutes. And then we'll go on to some key news as well.
Hey, Phil, that sounds good. Yeah, if you email it to me, I can get it uploaded for you.
Fantastic. Okay, that's just sent across. Great. Okay, so whilst we do that, guys, whilst we upload, let's look at the key news, which is going to affect the gold and silver markets over the next 24 hours. In fact, let me just have a look quickly at the price of gold right now for you. Yeah, $1,376 an ounce. Okay, so yeah, we're really near key resistance level, so we'll show you that in the chart in a second when we upload it. Big news you want to watch out for over the coming week. First of all, we've got today, we're just looking at GMT at the moment. So we've got this morning at 7 o'clock in the morning, we have the German GDP. So that is the gross. Okay, cool. So that is the gross, that is the German GDP, gross domestic product. That is the broadcast measure of economic activity and is a key indicator of economic health. So that quarterly percent change in GDP showing the growth rate of the economy as a whole. So in terms of this news and what it can do to affect the markets. Higher than expected readings should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro. That's important because of the euro correlation to gold price. So generally speaking, if you see the euro tanking, that tends to follow through to the price of gold as well. And likewise, if the euro is rallying, there's quite a strong correlation with gold. Next, for those of you who are trading any of the commodity currencies, we do have later on today at 1:30, we've got the CAD CPI, and that measures the change in the price of goods and services, excluding food and energy. CPI measures price change from the perspective of the consumer. It's a key way to measure changes in purchasing trends and inflation. Higher than expected readings should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. And that's important because the CAD is correlated to gold and oil prices. In fact, the CAD right at the moment is continuing. Let's just have a look. It's breakout at the moment, so we're actually, it's really strong right now. It's just still coming up. Got a key level of resistance it's on its way to at the moment, which would be the highs of 2013 at 1.0606. So if you trade CAD, that's important. A news announcement today. Later on today at 3 p.m. GMT, we've got the US new home sales. That measures the annualized number of new single-family homes that were sold during the previous month. And a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Okay, so next up we have the next Monday at 1:30 we have the US core durable goods orders. Okay, so just while we come up with that, we're very quickly, actually, bear with me. We're going to resend this presentation ever so quickly to Morgan. Bear with me. We should have the charts ready for you in less than 5 minutes. Good. Okay, excellent. So US core durable goods orders at Monday at 1:30 p.m. That measures the change in the total value of new orders for long-lasting manufactured goods. The core numbers gives a better gauge of ordering trends. Higher reading indicates increased manufacturing activity. Higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. So again, that's going to be affecting the gold and silver markets next Monday. Next Wednesday, so for those of you, we're talking about crude oil earlier, the crude oil inventories, that data, every Wednesday, 3:30 p.m. GMT, that data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis, and a higher than expected reading should be taken as bearish crude oil, while a lower than expected reading should be taken as bullish for crude oil. And that can often have quite an important impact for the crude oil prices. As we've seen there, we've got a number of opportunities each week to be trading breakouts on crude oil. Next Thursday, the 29th of August at 1:30 p.m., we have US natural gas storage. The Energy Information Administration, the EIE, natural gas storage reports measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So while this is a US indicator, it tends to have a greater impact on the CAD as well due to Canada's sizable energy sector. And that's important because CAD is correlated to gold and oil prices. Okay, and finally moving into additional news. Aha. Right, fantastic. We've got charts are up. Fantastic. Okay, good. So the charts are up, guys. Here we go. So we'll come back to that, just the final news for next week. Right, the first chart, actually, you know what, I'm going to go across, let's just see, we've got the US dollar index. So I've just superimposed the US dollar index on the screen at the moment. So let me talk you through that right now. So the US dollar index, in the bottom right hand corner here, this is very important. If you're going to be trading gold, silver, you need to really know what's going on with the US dollar index. You need to find a way to have that chart available to you. At the moment, that you can see we're testing that key trend line. So bottom right hand corner on the US dollar index, we do have a key trend line which is still providing support. We've tested that on a number of occasions. We've still not broken through it. We have seen some choppy moves on the US dollar index over the last couple of days. You can see there on the daily time frame where you've got sort of inverse hammers which have formed, where the price of the US dollar index has peaked up and it's come all the way down. We've also saw that yesterday. We got a nice solid move up, which caused weakness in gold and silver, and then we've just the bulls have come all the way down again, and we've just seen it settle around 81.50, which has caused gold to spike again. So this is just creating plenty of day trade opportunities on the gold and silver market. So if you see US dollar index rallying, and we look like, to be honest, where we are at the moment, the candle which is forming at the moment, it's early days right now, but the candle which is forming at the moment looks to be it's a bullish candle right now. I'll be interested to see if we're going to break above 82. If we do, we'd expect more weakness on gold and silver. You're going to be looking again at the moment. The buy zone on gold and silver is really between 1350 to 1360. If 1350 gets broken on gold, we can definitely expect a breakdown in gold, and probably we're going to get down to, there's a key Fibonacci level just below. We've got a key resistance at 1347, but then coming down to around the 1333 area. Now, if the US dollar index finds a weakness now again, and we see a retest of support and potentially break support, that's when I believe we're going to see 1400 gold. That's when we're going to get a breakout, we're going to get a spike to the upside. So very quickly, the top movers of the day, top right hand corner there, if you can see, just a quick overview. So we've got oil, top mover of the day, 0.32% up, silver 0.31, gold 0.29, also CAD 0.25, and the losers of the day at the moment, Australian dollar and New Zealand US dollar. So we've got some strength today in silver, gold and oil as well. So let's move across to the chart. So the chart here for, let's just go across to Brent first. So what you want to note on Brent crude oil is currently really getting pretty close to a key level of resistance around the 111 level. So if you are trading Brent crude oil, you've got support at the moment around 109.40. You can see we bounced off that. Even yesterday we bounced off that. We're finding support around 109.40 down to, let's just have a look. Down to, yeah, it's about 109. 100 is the whole buy area at the moment for crude oil seems to be 109 to 109.40. That's the level of support. So if you are setting up alerts on your trading platform, that's an area where we're seeing a lot of support at the moment. We are seeing supported moving averages which are starting to show high levels of support. So I'd be looking more around the 109.40 level, set up an alerts on any retracement. So right now, $110 a barrel. We're just consolidating. We are starting to form a box on Brent crude oil here. So we're finding resistance at $111 per barrel, and we're finding support at 109. So a breakdown from 109, I would expect us to come down, hit 108.50 relatively quickly, and a break of 108.43, very important level of support actually on Brent crude oil. It's an important key Fibonacci level. If you go back throughout the charts, you'll see this level be a key level, 108.43, levels of resistance and support, even going back to last year as well. So if that does break, we could then get about a $2 move to the downside. Likewise, on the bullish side, if we do get a breakout of $111 per barrel, there's not really too much to stop Brent crude oil from really being able to rally a dollar or two. Really, the next key level of resistance is $113 per barrel. So a breakout of 111. We would definitely be keeping a close eye on as well. You want to have alerts set at that key level as well and see how the market moves from there. But the more we consolidating between 109 and 111, the more we're going to probably see a high momentum move when we do break out either way. We're being supported by key MAs there at the moment, which would indicate that we're above all the key moving averages currently. So it's more likely we are going to get a breakout than a breakdown where we are right now. We're going to get further indication of that, with all the geopolitical news at the moment going on in Egypt, and also inventories next week will give us further big moves on crude oil moving into next week. But definitely very day tradable market at the moment. Keep an eye on crude oil and those important levels as well. Okay, moving on, we're just going to go across to let's go across to gold here. So looking at gold, so this is a screenshot of gold just taken the last few minutes. So what you can see here on gold is that we have come up. We've got that resistance zone, that real channel at the moment. So the channel that we've got on gold is between 1384 resistance going down to the lowest point of this channel at the moment is 1351. So you're getting a level of consolidation here at the moment. Now, there have been lots of opportunities so you've got 4 ways to trade gold right now, to day trade, okay? So you don't really want to get caught too much in the middle of these areas, but if the price comes down to around 1350 to 1360 area, you're going to be looking for buy opportunities. So those of you who trade candlesticks, you're going to be looking for those strong sort of hammers forming, going down. You know, if you're day trading, you can go down as tight as the 1 hour time frames on those. 1 hour and 4 hour, you're going to be looking for supportive candles around the 1350 to 1360 level. Okay, so if the price dips below 1360, if you're trading gold, set up those alerts on your MetaTrader or whatever platform that you are using, but try and have an alerts set at those levels, because then we're going to be looking for potential buys. If we break down below 1350, we're probably going to be able to move, or at least down to, would be a breakdown below 1350. Just want to see if we can get a little bit further and break past 1347. We had a tough time breaking past 1347 resistance to the upside, so we don't want to just sell short at 1350 just to get supported at 1347. But I do think a break of 1347 is going to hit stops out. We could probably get down to 1333 again, probably be a nice short and sharp move. I am bearing in mind that seasonality is dictating that normally in the last week of August we can see a sell-off moving into the beginning of September, so I will be keeping an eye on that for potential shorting opportunities. So that is if the price goes lower. So where we are right now at 1374, you also want to look at, if as the price comes up around 1380 level, in fact this is causing so many sell opportunities this week, around 1378 to 1380, when the price has got up to that key level, you want to be looking for opportunities to sell short as well if the momentum runs out. And again, you're going to be looking for candlestick setups at those key levels for just where you're seeing obvious resistance form at 1378 to 1380, and then finally a breakout above 1385. So don't get caught if it just only gets up to 1384, but if we can get above 1385, that's where you're going to see start pending orders get triggered. We've had enough time now of consolidation over the last week for a lot of orders to be put in place, so we could get a nice explosive move up to mid 1390s. 1395 would be one key level we'll be looking at, and if we can get above 1395 and break 1400, the momentum, there's not much to stop us from getting to 1415. So that's what I'll definitely be looking at. So we're going to be looking at, we've got alerts set, you know, both sides of this trade at the moment. Very day tradable market gold. That's what you want to be looking at right now on the gold market. Okay, so moving across to silver. With silver currently, we've actually got this whole consolidation zone on silver right now. So silver has, again, we've had some fantastic move, over 14% move on silver to the upside over the last week. So there's been a rather large move on silver, and now we're starting to see silver take a bit of a breather. It's consolidating. You've got key levels there. You've got a key level of support on silver at 22.30. Also, we found support there a couple of times this week, and you've got key resistance around 22.36. You've actually, if you go on the daily time frame, you can see sort of pin bars or dragonfly dojis which have formed, and 1, 2, 3, 4 times that we're testing around 23.30. So we're really starting to coil up. You know, when a market is moving in a tight consolidation range, it tends to be a bit like a spring. It builds up pressure, and then you're going to get a big move either to the upside or the downside. Now the MAs are still providing good support on this market, so currently it looks more likely that we may get a potential breakout, but I wouldn't really want to get in until we can get past some congestion here. So I want to see the market get past about 23.62 at the moment, which represents the high point that we reached going back to last week on Thursday and Friday, and in fact over Sunday when we spiked up to that level. But beyond that, we're just looking at this consolidation zone. Similar situation to gold. You know, if it comes down and tests that level of support around 22.33, we want alerts to go off and see if we get support at that level again in order to just buy. And you can pick off about an 80 pip move back up to 23.25 resistance. If we get a break below 22.32, which is Fibonacci level, the supportive level on the chart there, just to the bottom of that blue rectangle, we could see the price just quickly come down to the next Fibonacci level, which is 21.52. Okay, so that's a potential shorting opportunity if we break 22.30 down to 21.52, and a potential breakout of resistance would be wanting to see silver break out beyond $23.61 per ounce. Okay, so those are the key levels that we're going to be looking at on gold, silver, and the Brent crude oil market as well. Okay, excellent. So with that, let me just scroll down here and just see. What I'm going to do, I'm just going to put it back, and we're just going to go over to the US dollar index here. And what I'm just going to talk you through at the moment, the US dollar index as well, bottom right hand corner there, levels that you want to be looking at for the US dollar index is going to be a break above really the 82 level. So if we do manage to get to that level, it's providing quite a lot of resistance at the moment. If we get a break above the 82, this is where you're probably going to be seeing gold and silver start breaking support. So it depends which one triggers first really. You're probably going to get the trigger on US dollar index first, and this will follow through to gold and silver. There's a lot of correlations within these markets, particularly obviously with the US dollar index, XAU USD being priced against the US dollar and XAG USD being priced against US dollar priced against silver. So US dollar index extremely important to follow if you're day trading gold and silver. If we do get a break below 80, roughly about 80.70, then this is where we could be in for a nice breakout to the upside on gold and silver. So we're going to be watching those key levels on the US dollar index. That's going to be very important. Okay, let's just have a look in terms of there might be some geopolitical news. Just have a look with regard to oil at the moment. Just bear with me. Just seeing some additional news come out. We've just got headline news coming out there. Brent rising above 110 as global economic outlook grows. So we've got some just headline stories coming out of Reuters at the moment. We won't go into those in too much detail right now. I'll tell you what we'll do. We'll move on to the other presentation. We'll just go through what news we have left for the week ahead as well. If there are any questions at this point, do let us know. Nick is online as well. We will both be answering your questions. If you've got, actually, I'll tell you what I'm going to do. Before we do that, we're just going to go for a recap, okay, of these key markets that we had a look at. You know, obviously a lot of you would no doubt just be interested in gold and silver and in Brent oil if you're trading these key markets. Okay, so looking, okay, so a few questions coming through. So tomorrow, can we view the US dollar index on your website? So the US dollar index is available. I mean, we predominantly view that through the our Reuters platform, the US dollar index, which is available to get through our website. But you can find the US dollar index. You can find it on other. It is available online and other places. That's where we like to get our data from. But I tell you what, towards the end of the webinar, we'll be talking about how you can access some of our live information on news feeds and the data that we have. So we'll go over that for you tomorrow. Okay, so don't trade silver without a sizable account. Yeah, excellent. Thanks, Nick. So, right, the thing is, if you're trading, on a platform like DirectFX, for example, you don't need to necessarily have, you can trade in mini lots. You can trade much smaller amounts, so the volume size can be much smaller. So you're not going to have to put up huge amounts of risk on your trades. I mean, just to put it into perspective, you could be trading as little as 6 cents per pip move on silver. Well, actually, no, that's not true, because silver is 5 times leverage on gold. So you could be trading gold, for example, at 6 cents per pip move if you go into the micro lots. Silver moves 5 times the leverage of gold, so yes, that's why it's probably got a reputation of just being more tricky to trade. But nevertheless, if you're trading micro lots, that's only 30 cents per pip move. So if you think about it like this, if you want to take a trade and it's got a 50 pip risk to it, and you go in, I mean, I'm just talking really tiny amounts here. If you go in at 0.01, that would be 30 p per point risk. You'd be risking, 15 US dollars for a 50 point stop on silver. And then you go up obviously to the larger lot sizes there. If you went in, for example, at a volume of 1, which would be the equivalent to $30 per pip, you would be looking in terms of dollars at something similar to $1,500 per lot traded for a 50 point risk. Okay, so there's almost no volume in the micro gold. Well, no, there is definitely, volatility on gold. It moves, circa around 300 pips per day. So there's a lot of volatility you can take advantage of. If you trade a platform like Direct FX, for example, I mean, maybe next time we do a webinar, we can show you that live. In fact, if I have my live, you can see my screen right now. I'll take a trade for you right now just to show you the volatility which is available. We're trading on the very small micro moves on gold here. So if you get a move from 13, let's say we broke down from 1375, we came down to 1365, which is very realistic for a day trade. That's a 100 pip move. So depending on how heavy you wanted to be in that trade, there's a lot of money that can be made just on those smaller moves. Okay, so yeah, we're trading XAU USD and XAU XAG. Do micros have a time lag? No, not at all. It's instant execution. Okay, so question from Jerry. Dollar has been going up, so does gold. Does it mean gold is going to break out to the upside? Well, in fact, US dollar index, if you bring it back into a tighter time frame, the US dollar index went down overnight. If you put it on the daily time frame, you'll see we have found a little bit of support, which caused a little bit of weakness on gold yesterday. We actually came down lower this week. We came pretty low on Wednesday's FOMC. So you saw the US dollar spiking to the upside, and gold came down to just around 1357 area on US dollar index spiking. Occasionally, you will see them moving in tandem. You will get some occurrences like that, but generally speaking, the correlation is that if the US dollar, I mean, you look at the chart at the moment, you go into, let me put it on the US dollar index. This is the US dollar index. We've been falling on the US dollar index throughout August, and this is where we've been seeing a lot of upside momentum with gold. So as the US dollar index has been falling, gold has been rising. This morning, we are starting to see gold is starting to, US dollar index is getting some support around the 81.50 level. We're seeing, obviously, we're going to get more clue as to what US dollar index is going to do today. It's actually just below the 200-day moving average, which is interesting, finding a bit of resistance there right now. But if the US dollar index does continue to slowly grind up today, you'll see weakness in gold, potential day trade opportunities as well. Yep, okay, great stuff. All right, no worries. Ted, I hope that answers your question. Jerry? Yep, no worries, Jerry. Okay, let's, I just want to see if there's any more questions coming through here. There seems to be, oh, you understand, okay, GC futures, you're trading gold versus, okay, so you got that, Sherry. Okay, that's fantastic. I think we've answered your question there with regard to micros. Yeah, it's a very accessible market, trading gold and silver. If you're trading at the XAU USD and XAU XAG, you just need to know what your risk management needs to be, which is pretty straightforward to work out once you know what the volumes equate to in terms of dollars per pip move. But yeah, it makes it very day tradable for gold, for silver, for Brent crude oil. Okay. Okay, so let me go over to, actually what I want to do is go back to silver again as well. Actually, how many of you guys trade silver? Suspect it's probably more gold that I would find a lot of you trading. SLV, Betty, okay, good stuff. No, tomorrow. Sammy Silver, okay, cool. Good, right, so let's okay, excellent. Let me do just a little bit more analysis on silver because I think it's important because we've had, it's been a massive move. It's moved over about 14% in a week. So let's just have a look at silver because you just want to be a bit cautious at this time on silver, just because there are a couple of things you want to be a little bit cautious of. But you also, by the same token, you want to just be able to trade breaks of consolidation at the moment. You certainly don't want to get into silver right now if we're just going to see a big fall. It's moved very quickly to the upside. It is above. So for the bulls, we give the case for the bulls and the bears and the day trading. Okay. So on the bullish side, okay, we're above a lot of key moving averages at the moment. We've had quite a significant breakout. We have come to an area where where you would expect to see a lot of profit taking, which is around a Fibonacci level here at 23.18. What is positive is the fact that we haven't given back all those gains. We've only just come back to a key level of support around 22.32. So silver is still maintaining quite a lot of the up move. In fact, it's almost back to almost the highs for the last week, the high being 23.61, and we're just under $23 an ounce at the moment. I would be careful at the moment whilst it's consolidating. It's yet to pick a move, whether we're going to get a breakout. You really want to wait until it breaks out around about 23.60 or just above that, or whether we get a break below the 22.30 level. So that's what we're going to be looking at silver. In terms of a breakout, if it breaks above 23.60, there's not too much to stop it from getting to around $25 an ounce. And if we can get past $25 an ounce, we'll probably come up to 26. There's hardly anything to stop it from 25 to 26. Now 26 is going to be a very important level, line in the sand for silver, because when we broke $26 an ounce, that's where a lot of traders, if they're still staying long in positions, would have got caught out. They might have tried to enter into that because it was a major level of support which held for 18 months. So if we do get a rally all the way to 26, definitely expect some solid resistance around that level, as some traders just offload. Some of them would just breathe a sigh of relief to get out of break even if they've been holding it all this time while it's been coming down. But 26, if we can get to that level, is going to be a key area. Okay, in terms of seasonality, Sammy, yeah, seasonality-wise, what we'll do actually, because we've got about 7 minutes left, we'll bring, if Morgan, if you're able to upload the other presentation again, if possible, and I'll just cover the last bit of news going forward and just a little bit more information as well, if you get a chance. So just in terms of seasonality, yeah, if I go back to my seasonality slide, I'll try and go back to it on my main presentation if we can get that uploaded for you guys. But yeah, seasonality wise, we do normally see a pullback towards the end of August. So let me just go back to my seasonality chart. Okay, well, seasonality wise, we are right at the peak of where we would expect August silver to be right now. There's always, you get a spike high circa around the 3rd week of August, and we're right there. We're right at the pinnacle of that high right now. So the question is, are we going to go just a little bit higher before perhaps we're going to get a bit of a correction here? I do expect potentially we could get some further moves high in September, but we may get a bit of a correction here. It depends whether we can, if 13.86 just provides too much resistance here, we could potentially just see a reversal and come back to around the 13.33, well, 13.50. If we break that, 13.33, and if we break that, 13.17 will be key levels. Then we may find some support and the next leg up, moving into early September, around the non-farm payroll figures area. That's where we could get the next spike up. But yeah, seasonality wise, we do normally see some sort of correction towards the end of August. So that's what we'll be looking out for. But again, we're not going to trade based purely on seasonality. We also want to trade the technicals. If we break above 13.86, we'll trade the breakout. If we sell off from here, we'll also trade breaks of support. So that's what we'll be looking at, and any potential retest of 13.86, which the more times we test that level and we can't break it, the more we're going to be likely to be able to take some nice day trades, just shorting as well. So as I said before, it's just a very day tradable market. Okay, excellent. What we'll do, we'll see if we can come back to the, let's see if I can actually upload it here. A few questions coming through with regard to copper. We'll see if we can bring that on, guys. We've got about 5 minutes left. I'll bring it on my screen. I might be able to talk you through it if you've got that chart yourself. Okay, I'll tell you what we do, guys. Whilst we're waiting, Morgan, if you are able to bring on the other presentation, to bring it back, the main presentation, what I'll do, I'll just wrap up with the last news for the week ahead with that as well. If not, I'll just do some quick analysis on copper for you guys as well. Aha, fantastic. Okay, great. Thanks, Morgan. It's fantastic. Okay, let's quickly go through this for you guys. Okay, here we go. So this is gold seasonality here. So here we go. End of August. Look at this. This is what we see typically every year. Get a nice spike high. Look at this, where we are now. Boom. We got that spike high right now. So seasonality followed so well in the end of towards the end of August here. So will we get another spike high, or are we going to get a correction here? So are we going to see this happen? Are we going to see the price come down? Okay. So with that, we've got 3 minutes, 30 seconds left. So let me just quickly go on to talk about. Okay, in fact, what I'll do, I'll just move on quickly because we've got 3 minutes left, guys. So we've got a lot of questions just about charts, how we're trading, what volumes we're using, how we're using MetaTrader, US dollar index, and so forth. So I'll just talk you through our live trading room. The next live trading room we've got is going to be starting early next week. And the live trading room presented by myself and Nick Kelsey at the Gold and Silver Club. If you'd like to find out more information about our live trading room, where we're taking live trades on that, we're discussing markets real time, we're setting up alerts, we're setting up pending orders, we're looking and analyzing the markets over several live trading rooms, which we do. You can find out more about that if you just go to www.jointhegoldandsilverclub.com. In fact, Nick might post the link just there for you guys as well. Also, take a look at our website. We've got a lot of free information that you can digest from our website as well. If you want to contact us about our live trading room program, you can contact us on our London office on 0207 193-0403 or our New York office at don't think you need the +1 in from America, but it's +1 646 808 0403, or do make sure you email us at office@thegoldensilverclub.com. Okay, so that's just to find out more about our live trading room. Next live trading room will be I believe next live trading room is going to be Monday or Tuesday next week, and that's something which is held frequently every single week. So to join our next live trading room, you can go to that link. Also, make sure you subscribe to our newsletter, www.thegoldensilverclub.com. You'll see free weekly gold, silver, oil, and commodity currency news, live market analysis, and prices. Okay, so we're just getting a question through here just with regard to, bear with me 1 second, guys. Looks like we might be able to get a little bit. Okay, we've got an extension, guys, a small extension here. We can do another 15 minutes for you guys. So yeah, I'd definitely be happy to do that for you guys, so we can look at copper as well. You won't be able to see it on my chart, on my screen, but I'll do some quick analysis on copper. So we just go on for, yeah, we've just got another 15 minutes. I might even see if I can get a screenshot and send it through, but yeah, hang tight. We'll see if we can cover that. So also make sure you subscribe to our newsletter, www.thegoldensilverclub.com. You can receive free weekly gold, silver, oil, commodity currency news, live market analysis, and prices. That's free. Take advantage of that. It's you also get our weekly video with a weekly roundup of the markets, looking all the key levels for the week ahead as well. And just before I go into copper, actually, let me bring that up on my screen so I can talk you through that. And just on the screen there is also, this is major news, which is going to affect the markets moving into next week. Okay, we're just going to check that we've got a appropriate update on the copper market here. We've got the pricing. Could someone put the pricing down of their copper right now, that they see copper right now? I just want to check we've got the right feed here at the moment for copper. before we analyze this chart. I'm seeing at the moment 3.3195. 3.3215, yeah, pretty much. Okay, that's pretty much spot on. Okay, great. So let's have a look at copper. Right, okay, so you're not going to be able to see my chart, but there's a few of you, who are trading copper anyway, so you'll be able to see what I'm talking about on your own chart. So yeah, copper looking interesting. Let's just go to weekly on here as well. There is a Fibonacci level which the price is bouncing off at the moment, which is quite important. We've got some support around a couple of key moving averages. One moving average that you probably want to put on your chart there for copper is the 8-day exponential moving average. So if you don't have that on your chart, it's pretty useful for trading this market. What you'll see is the price actually right there at the moment. It's been supported. It's closed right on the 8-day exponential for the last 2 days in a row, and it's finding support at that level right now at the 8-day exponential. So we're at 3.3200 now. It's a bit similar to what we're seeing on the gold and silver market at the moment. We've had a huge move to the upside. We've found resistance actually at a key Fibonacci level as well. 3.3710 is where we found resistance. We're finding support at a Fibonacci level just below, a bit similar to the situation on silver at 3.3092. At the moment, it's not really, it's a bit neutral where it is right now. You might find some supportive buying around the 3.092 level, where we're just above that at the moment. But you want to start trading, see if there's potentials to trade breakout on this market. I'd be quite interested in copper if we got a breakdown below the 3.2837 level, because that has provided support on 3 occasions now. So I think a breakdown of that, we could easily come down to test previous resistance and a Fibonacci level below at 3.2266. I apologize, guys, for those who can't see my screen, but for those who trade copper, you'll probably get what I'm talking about. And also for upside move, I'd like to see a breakout beyond 3.3785. So for me, this is consolidating, very similar to gold and silver, and I want to see a breakout in either direction and potential to sell off from the resistance and buy at support as well. Okay, cool. So a couple of questions there. So do you trade off the daily chart? Yeah, I do. We've got swing trading strategies where we trade off the daily chart. We trade intraday as well. So as well as trading, we've got a number of our traders who they are end of day traders who trade our swing trading strategy. So we do a lot of analysis on daily charts. And then if you're going to do your intraday trading, you want to break it down. So you go from your day trading, then you want to get down into the 4-hour charts. And then if you're really news trading, you want to get down into about the 1-hour charts for some of the more intraday moves, but you're often targeting smaller pips on those intraday moves. But the daily time frame tends to give you some of the stronger signals, but intraday for trading the news, you're going to get a lot of the signals. A lot of time the signal will be a bit too late on the daily if you're trying to trade a news announcement, for example. But yeah, we do trade both of those. Yeah, we look for swing. So if you're looking on a swing trade at the moment, yeah, on copper, I would still look for those key levels in order to go, really. The key levels you want to be looking out for are going to be that level of support around 3.2837. If we get down to there and we break that, we're probably going to be able to come down easily to about 3.2266. There's not much to stop the market from getting down there. Then a break above 3.3785. Just draw a channel on the recent move over the last really about 10 days or so, and you'll also see that we're finding just support around the just around about where the price is at the moment. So we're seeing closes above, consistently we're closing just above 3.3092 on copper. So for me, I would just want a little bit further confirmation. It's a little bit neutral at the moment. You're going to see that the correlation there with gold and silver at the moment. If gold breaks out, and then, so it's a bit like dominoes, with these markets sometimes, with gold, silver, and copper. You want to be seeing which one's going to trigger first. If this happens so often, last week we saw silver trigger first. Actually, no, we saw copper trigger first, then we saw silver, and then we saw gold. So if you see copper breaks down first, then you want to look at gold and silver, and if they're getting near support, you're probably going to see a break in those markets as well. So which one's going to break out first, gold, silver, or copper? And then the one that breaks out first, you can then, if you miss that move, you can look at the correlations. Same with the downside as well. They don't tend to all move at the same time and break unless it's a news announcement. Otherwise, it just tends to be like dominoes, and you can just follow the correlation across to the other pairs. Good example this week on the commodity currencies. Monday, Australian US dollar was tanking. New Zealand US dollar was hovering around resistance. Within about 2 hours, it then started to fall and provided a 200 pip move over this week. They're strongly correlated to commodities as well, but that's what you want to look for within those markets. Okay, excellent. So just to wrap up there as well, looking, if there are any more questions, guys, just post those through as well. Just we want to look at towards the end of next week as well, any key news which might affect the markets that we're trading. So next Thursday, 29th, we've got 1:30 p.m. We've got the US GDP. So that measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. And that is the broadest measure of economic activity and the primary indicator of the economy's health. Higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. So that's next Thursday, 1:30 GMT. Next Friday at 1:30, we have the CAD GDP. So that will of course affect CAD trades. Measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. That's the broadest measure of economic activity and the primary indicator of the economy's health. So Canada releases fresh GDP data on a monthly basis. Higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD, and that's important because of the CAD correlation to gold and oil prices. And next Friday at 2:55, we have the Michigan Consumer Sentiment. That's GMT. So that index rates the relative level of current and future economic conditions. There are two versions of that data released 2 weeks apart. So the preliminary data tends to have a greater impact. So a higher than expected reading should be taken as bullish for the USD, and a lower than expected reading should be taken as bearish. So those are the key news announcements which will definitely affect the gold, silver, oil, and commodity currency markets over the course of next week, moving into next week. Okay. Excellent. So, guys, there are our contact details for just getting in touch with us. Let's just see if there are any more questions here as well. Excellent. Yeah, no problem, Kieran. Great stuff. Just bear with me. I think we've got a couple of questions just coming in via Nick. Just waiting for those to come in. Excellent. Well, great stuff, guys. Well, I'm glad you enjoyed the session. If there are any other questions, do post those through. Okay. Oh, right. Okay. So there is a question just about CAD. So the inverse correlation to gold. So what you will tend to find is the USD, USD CAD essentially tends to move in the opposite direction to gold. This correlation is existent about 70-75% of the time. It's not always the case, but a lot of the time you will see, particularly on important announcements where you see the US dollar index spiking. For most of July, the USD CAD was very correlated to the US dollar index. So we were saying breakdowns of the US dollar index and very straightforward setups to short USD CAD while we saw gold spiking as well. There were a lot of setups towards the downside until we came to major support. USD CAD has been similar in US dollar index that it hasn't broken about a year trend line on the, so you can draw a trend line on USD CAD just from key levels of support. So you take your USD CAD chart, put it into a daily time frame, look at the two year. Let me just have a look at my chart. Let's get this bang on. See how far back we go. Going back to September 2012, put it on the, wow, God, that's spiking massively. Over, that's getting a really good breakout. So over the last, on the daily chart, going back to September 2012, we got this key level of support that held. You got a key Fibonacci support which held at 1.02651, and it held along with the US dollar index. USD CAD has had a much bigger move to the upside than US dollar index. So I'm wondering whether if we're going to see the US dollar index find some support here, and which would make sense for seasonality wise, because then we would get a correction of gold towards the end of August. But we're not going to take a trade until we see what the technicals are telling us on that. But USD CAD, if anybody's still in long that position, it's breaking out quite significantly now. So over, we had that breakout from 1.0444. You can see that was a key level of resistance. We broke out from that on the FOMC, and since then we look like we're heading all the way to 1.06068, which would be the July 2013 resistance. And note again, the banks, there were a lot of the banks predicting a move throughout most of this month. Whilst the USD CAD was right at the lows, they were predicting a bullish move on USD CAD. So that's quite interesting. There's not really, it's coming into a little bit of resistance on USD CAD. Obviously, if the US dollar index now starts to sell off and we get a break of support, we'll see the USD CAD most likely reverse as well and offer sell short. I'm definitely going to be looking very closely now to see if we're going to get a further breakout, or we're just going to see a lot of profit taking now around these resistance levels for USD CAD, offering potential short opportunities. So we'll be keeping definitely a close eye on that, guys. Okay, excellent question from Jason there. So how we use gold and silver relationship with the emerging markets over the next few months. Possibly we might actually, the next presentation we do might go into that in a little bit more detail and talk about some emerging markets as well. We do have direct effects in particular. We've got a lot of emerging markets coming onto the platform from September onwards. We're going to be doing some webinars with regards to those new markets, so you'll be able to trade gold not just against the dollar, but against a lot of emerging markets as well, which is going to be quite lucrative. So I think that will probably be worth doing an additional webinar specifically on that. Emerging markets are essentially very big buyers of gold and silver right now. So yeah, there are a lot of opportunities within that market to trade it. Yep, excellent. Yeah, just some key, some of the key emerging markets at the moment: South America, Azerbaijan, Russia. These are just some of the key emerging markets that we're seeing a lot of interest at the moment with regard to trading gold. So yeah, some very lucrative markets there, which are very tradable. But we'll see some of you sign up for the newsletter. That's great. We'll keep you informed about that as well with regard to future webinars we'll be doing on that from September onwards. Yeah, Andrew, the Turkish market is available to us to trade as well. Yep, that is one which is an emerging market, which is tradable as well. Yeah, spot on, Jason. Yeah, the BRIC nations essentially. Yeah, you've got it. So Brazil, Russia, India, China. Great stuff. Excellent. So with that, guys, what I'm going to leave it on, I'm just going to go back to this nice seasonality chart for you, just so you can digest that a little bit more. Just for let's go back to, here we go. Actually, let me just show you the USD, a few questions on USD CAD. This is the USD CAD forecast, which has been in play by the major banks for about the last 3 or 4 weeks now. We keep a close eye on this. Very interesting that they've been predicting this move for for about 3 or 4 weeks now, this spike in USD CAD. So I would be looking at that resistance level very closely if you do trade USD CAD. We're breaking out at the moment, but I think we could come into some resistance around 1.06068. We're also coming up to like end of June resistance as well. There's a whole cluster of resistance we could come into. So we'll be keeping an eye on USD CAD for potential sells, potential sell shorts here. Just going back to let me just go back to gold seasonality for you again. So this is where we are at the moment. For those of you who come on a little bit later onto the webinar, going back to the gold futures here, this is the seasonal chart, 32-year seasonal chart, and you'll see actually we bottomed out, you know, in typical seasonality style in June and July. We've now seen a huge move in August. We're potentially expecting some sort of correction now. It may not be yet. We might still be able to spike a little bit higher, but we're expecting a potential correction towards the end of August now, and then we could get the next big move up in September. Typically, this time of year, August through to December, it's the bullish season for gold, silver, for commodities in general. So you do tend to see more upside moves than you will on the short side. You know, spring tends to be much weaker. Okay, and just finally as well, just getting a couple of questions through from this from Nick as well that we're getting. So just quickly again, we've had a couple of questions about this. Our live trading room, the next live trading room we're going to be doing will be next week. And we'll confirm with you whether that be on the Monday or the Tuesday. So the live trading room, which you can, if you want to find out more information about our live trading room, where you can be with us literally as we are, you can see us taking trades live, see a lot of our traders on there, helping with all sorts, and we're going to be talking through a lot of different setups. You'll be able to see my screens, which you can't see right now. Yeah, if you want to get more information on that, this is where you get it from. You just go to jointhegoldandsilverclub.com, just that link, and you can find more information there just about the live trading room. Okay, excellent, good. Okay, fantastic, guys. I think that wraps it up. Just a quick note from Nick there. Okay, oh, that's fine. Right, a couple of you guys asking how you actually sign up for that. So you just, very simply, guys, you go to jointhegoldandsilverclub.com. On there, you'll find just like an application form. If you fill that in, just then that will give you some additional information to request additional information, and then our office will be just in touch with you about that, so you can find out a little bit more. Okay, excellent. Well, with that, guys, we're almost coming to an end now. Oh, there you go. Nick's just posted that in the links for you guys. And with that, guys, great audience today. Really interactive, really enjoyed it. Thanks, guys, for making it a really good session. And good luck, of course, for the rest of your trading. We'll hear from those of you who are going to get in touch with us. Do take advantage, of course, of our free weekly newsletter as well. We can find a lot of information on our blog as well, as we keep everybody updated on the gold and silver markets. We look forward to speaking to you guys again on the next webinar we do. And yeah, take care, guys, and we'll see you on the next one. Good luck with your trading. Cheers. And with that, I'll pass back to Morgan. Thanks, Morgan. Thanks, guys. Bye-bye.